Hello, Tommy Sandvik here with the Bull and Barrett Traders, and today what we're going to cover is kind of what to do regarding zone trades on the 4-hour chart as sort of an extension of my previous two videos regarding zone trading and how to handle it. A couple things were learned this week, so I want to show those and teach you how you can still profit even when the system, so to speak, goes against you. So without further ado, let's get started. Okay, so first of all, don't forget to subscribe to our channel and for more awesome videos like these, and believe me, we have a lot more coming. And don't forget to sign up for our email list as well so you can be notified when our website goes live. And we have more details on that coming very, very, very soon. And also our Facebook group. Yep, you can join our Facebook group and get some free signals going forward, and find out what we are all about. Okay, so let's talk about, I'm not really going to go over the previous information. You can view the other videos. I do my best to keep them on point and very to the point, and so that it's not a whole lot of droning on, so to speak. So today we're going to cover a situation that happened in this last week with the dollar CAD, and this is actually something that is going to happen on any pair at any given point. So as you recall, the point of doing these zones is that they're areas of rejection, areas where price has not just bounced, but bounced massively away from a given area. However, it is definitely possible and likely will happen that at some point these zones are going to break, and when that does happen, you're going to lose. Okay, so that's the first thing. We have to accept that. But that doesn't mean that there isn't still the possibility to continue to use the area that broke. You just have to be a little bit patient about it. So what we have here, this is the dollar CAD, is we had, just to give some dates here, so the 17th, price went all the way up towards the upper level here, and this zone up at the top is a zone from 2004. Crazy, crazy, super powerful. Okay, so I knew up there I didn't take that trade, but I believe I took this one, which happened again on the 21st. But what's interesting here in this process is that in terms of drawing out a zone, it had this big move, and then it went up to our high, and then it came back. And what's interesting is we found this big candle here. We have this big wick, and this big wick gave a massive rejection off of this level, and then price kind of ranged up here and then eventually came down. So when you actually look historically at that level, again, it's actually really hard to find. So what's actually really challenging about this chart is that I can't really go back in history to even on the 4-hour to find these levels. So I had to sort of figure this out according to what we have now to work with. And this is really important because what we're doing really, in a way, is establishing a new zone other than the extreme high, which is up here, right, from 2004. But we're establishing the bottom sort of range that the price decides to go in. So what I did, if I recall correctly, is we had this big massive rejection on the 4-hour, and I went, okay, let's see what happened on the 1-hour. So what we see on the 1-hour is that actually the zone was just this portion here. So I'm going to put another line. Here. So we go back up to the 4-hour, and we find that although this was actually a huge rejection from here all the way down and back up. If you look at the hourly, you can actually see that it was at this level. So that helps you to narrow down the zone a little bit. If we go down to the 15-minute, then it becomes even more clear, and we see the wick down here. So we see really could get down to a minute level where the highest area of rejection was. And so I would actually, based on this, go like this, and there's our zone. So what we've done really, and this actually is valuable information because you're looking at a zone and then you're identifying your strike rates within that zone. And you can do this process either historically or let price give you that information, and then when it comes back to it, you've got that information to go off of. And this is why this is such a great example, because although the upper range is from 2004, this sort of bottom range that I've drawn out here where we had this rejection, this is not anything recent. This is all new price action that's happening. So you have to be a little bit patient, but we're able to then establish our lines. So now we've gone from identifying, hey, there's this big, huge wick, and then saying, hey, here's actually the top of the zone. Here's the bottom of the zone where we're going to have the highest probability of success. So let's use that going forward. Okay, so what we did here, and this is why it's such a great example, because it lost. Okay, so you can't always show the winners, right? We need to show the losers too. So here's what happened. We had one touch into the zone here on this candle. This is on the hourly. So we had a touch and rejection in this candle. Great. If you would have had, if you would have been aiming for a strike rate at the top of the zone, that would have won. You could have come in. You had plenty of opportunity. It looks like it came in quite a bit. We can even flip down to the 15-minute chart. Okay. So if we dip down to the 15-minute, we see actually this price action happened within a 15-minute bar. It was a really long wick to the downside and then passed up. We can even go down to the 5-minute, and we can see that we had a full 5-minute bar coming down here and then a retrace bar with a little bit of wick. So I would venture to guess you had approximately a 10-minute window to enter this trade. And you can go down to 1 minute too, but we're not going to go that extreme. All right, so back out to the hourly. So we had one opportunity here, a touch, it would have won. So you're going, great, fantastic. Let's do it again. Now the next time you come in here and you take the trade, let's jump to the 15-minute. So the next time you come in, price touches that top level. You've got a 15-minute trade. Or even if you took top of the hour, which is what the rule, part of the rule says, you've lost. And I mean, it never comes back up. So pretty much no matter what, this trade loses no matter your expiry time. Shoot. Now what? Well, you've got the secondary lines down here. So even though this one lost, you have an opportunity here because it came down, and if you remember on our 15 minutes before, we remember that this level is where we had a rejection. So if you came down in here and took the trade here for like next candle expiry, and even, I mean, let's see, this happened at, this bar opened at 45, so if you, sorry, it opened at 45 and it opened up here. So if it came down here, you probably wouldn't want same candle, so you would have gone next candle. So so this could have won. Actually, a couple opportunities. I mean, this is like even really an hourly, you would have won, even if you took an hour candle. If you look, right, price came down. If you stuck, I mean, there's a lot of variables in here. I'm sorry if I'm not making this clear. You can either go down to the 15-minute chart and try to do it that way, or just simply stick to the hourly. If you stick to the hourly, you go, look, price came all the way down. I lost that trade. I accept that. But the next hour, you have a really good opportunity for the retrace, for the rejection to happen. As it so happens, if you had taken this trade right at the start of this candle, it would have won. As you see, it was ultimately a bull candle, although it was a massive rejection, it still won. At this point, then, you're going, since it came all the way back down, this price action here is telling you, hey, there's a lot of rejection up here. You're not going to break through it because it pushed all the way back. And so I definitely would not be taking any more calls on this. So at that point, I kind of stopped looking at the chart. Now, what's interesting, though, is if you go out to the 4-hour now, what we see happening is a very tight range of where our 4-hour bars are closing. And you can, going back to what I said in my previous video, where your optimum time to be taking these trades are the last hour of a 4-hour bar, because you're basically trying to predict where will the 4-hour bar close based on historical data. So a trade I took on the last trading day, which would have been Thursday, right, I think. Yeah, I took a trade on Thursday, and if I recall correctly, I'm trying to remember what the trade actually was. I believe it was, let me get rid of this so I can look at the, it had to do with a 4-hour close, and I believe I was looking at, I had put lines here, so basically the top of the most recent 4-hour closes, and then I put a line here, which is the bottom of the 4-hour closes. And I was waiting for price to be outside of those levels. I think I might have been actually this last bar. I think that might have been the one that I took. Price was down here in the last hour, and it retraced up into this range. So I had taken a call, assuming that the 4-hour bar was going to close within this range that it had been in. But as you see, there actually would have been, you figure, okay, here you've got a good established range. This is 12 hours of price action, right? So at this point, if price is up here in the last hour, you've got a good shot there on a put. If price is, it just kind of depends on where it is in the last hour, but I would start, my point is that I would draw out these lines to indicate where there would be a good opportunity in the last hour. So we had the zone got broken. There was an opportunity to at least make some back after the initial break lost, but then price went into this range, and that's where Jimmy's strategy, finding your lines and being able to trade off of them, definitely comes into play. Because if you go, this looks like a mess because of where the lines are now, but actually if you go back again historical to what I had drawn before, so let's do new lines. Right, so you could do the 4-hour strategy, where you're going solely based on the close of the 4-hour bar and finding the range where that's been happening when price goes into this little area where it just bounces up and down. And it's a great time for that over the holidays, because the chances of a big, huge, massive move are pretty low, just because volume is down. Or if there is a big move, then you're going to get the consolidation, which is what we're kind of seeing right now. So yeah, but if you go to, with this particular setup, we were over here, right? So let's go here, go down to the 15. Yeah, so here's where our lines were, right? Look at that. So you had opportunities in here with these lines that when it went outside the lines, it came back quite a bit. So there was some, perhaps some opportunity there. I wouldn't say that it was the best, but it's a possibility. But my main focus that I wanted to show, again, I'm sorry if I've been a little bit all over the place. The main thing I wanted to show was sticking within the 4-hour concept, and the rule being to trade only the last hour of the 4-hour bar. Even once you're beyond the zone, even if the zone has broken, once it establishes a range like this, if you have price up here the last hour, you have price down here in the last hour, you know there's a good probability that it's going to, that it could come back within the last hour and where that 4-hour bar is going to close. So basically, trading on the close of the 4-hour bar, even if it's not directly related to a quote-unquote zone. Now, an interesting thing about this is we did have a touch down here and some rejection. That was kind of the extension. So might want to keep an eye on this level again, because if you look back, look at what we have here. We have also some rejection level in here. So again, the zones are very fluid. And it's definitely worth continually checking on the chart to see where these things have occurred, because now I may end up drawing a zone like somewhere along the line, pretty much. Again, you remember, you don't want price to close within the zone. You want wicks. So based on this, I would draw even in here. Now it looks like I've got zones all over the place, right? But that's okay, because you just understand which ones have been taken out, which ones still exist, and letting price sort of go that. So I would say, for instance, this week, that if price comes down to, and it's funny because I actually already have an alert set at the 1.38319 level. So if price comes down here, I would probably take a call, especially if it happens within the last hour of the 4-hour bar. So I just wanted to kind of show this, how zones are very fluid and how you can handle even if you've lost the expected behavior, because within the zone you have kind of different levels. You have the touch of the zone, and then you have the extension of the zone, which we saw in this case. We saw that initially there was a rejection on the touch of the zone, which happened here. Then we went to the extension to the far end and then retraced a bit, although it didn't stick, and ultimately the zone was broken. Now the interesting thing though is that this is still a valid zone, because price hasn't closed within it. Just even within this level, right? Price has not closed within this zone. So it is still a valid rejection zone, but now instead of being a rejection to the upside, it's a rejection to the downside. So it's going to, in other words, it is now resistance until proven otherwise. It may, if oil falls, it may come back up and touch these high levels again, or it's going to continue to drop. We don't know which, obviously. So that's what I've got for this video. I have another one coming, which is going to just cover like trading in low volatility and just understanding the market movements that can happen. But this is it for now. So thanks so much. I hope you found it valuable. Don't forget to subscribe, sign up to our newsletter, and all that fun stuff. Thanks so much.